Welcome, everybody. Today, I'm pleased to introduce Anna Nerys. She is an iShares product strategist covering the thematic and active ETF product segments. In this role, she supports sales, range management, research, and marketing. She joined BlackRock through the analyst program in 2017, and in 2021 was accepted into the Keystone program. The Keystone program is comprised of a select group of high potential sales professionals who are preparing for senior client-facing positions. Anna graduated with a Bachelor of Arts degree in economics from New York University. So we've got a lot to talk about here today. So let's just jump right into this conversation. Anna, thank you for joining us. And for our audience, can you explain what thematic investing really means and why owning the future through these big structural changes feels especially relevant right now?
Absolutely, Conrad. And thank you so much for having me. It is a pleasure to be here talking about what is truly my favorite thing to talk about, and I'm very lucky because that's also my job. But thematic investing is what gets me really excited because at its core, what it's really about is thinking about how we invest in long-term structural change. And there has always been change. I mean, we've lived through so many different iterations of that, but I feel like at this particular moment, we're living through a lot of different, what we would refer to as mega forces, these very long-term structural changes that are reshaping the economy, our society, the markets. And I think for many people, the natural next question is, okay, well, how do I then invest in this change? Because there is always the possibility for new winners to emerge. And yet at the same time, there's also that question of, okay, well, how do I avoid those losers? And obviously we know none of us can predict the future. And so I think what thematic investing does is allow people to access precise segments of that change and the companies associated with them in a way that's diversified and yet also very targeted. And so I think it's a little bit different than maybe some of the traditional investing techniques that we might think of. Perhaps it's investing by style, this idea of growth versus value or momentum. And then on the other hand, investing by sector. Because sometimes these themes are not taking place within a single sector. Sometimes they're taking place across multiple sectors. And so thematic investing is about building tools to access this change in ways that are a little bit different than maybe how we thought of investing before.
Right. Could you just maybe give a quick example about how a theme can sort of transcend different sectoral boundaries or different style boundaries, for example?
Absolutely. I mean, I think one example that I think it helps people understand or that illustrates this idea is thinking about the theme of future transportation, self-driving cars, electric vehicles. And on paper, when you look at let's say, lithium mining company in China and a German auto manufacturer, both of these companies live in different sectors. They do very different things. Their revenue is coming from different places. And yet what ties them together is this theme of electric vehicles. And so I think you can kind of point this out for many different themes and many different sectors. But the way to do it is to think about the value chain of a theme. If you're excited about electric vehicles, how do you own all of the components of that theme? Across automakers, batteries, materials, thinking through software and some of that autonomous technology that's being implemented into new age vehicles. And again, I mentioned transformation, but just to kind of maybe make it more personal, like I think about the transformation in cars alone that we have all lived through in like a very short amount of time. Like Conrad, this is a true story. My grandmother, who grew up in rural Eastern Europe, she was 11 years old the first time that she saw a car for the first time, because it took a little while for technology to make it over there. And my mother now drives a vehicle that is fully electric. And 2 weeks ago, I was in San Francisco taking a car that's fully autonomous to the airport. So it's just, it's about this change that we live through that like in the moment maybe doesn't seem as groundbreaking as it is, but that's why I like talking about it, because when you take a step back, you realize, wow, like we have really lived through a lot so far.
Absolutely. Well, I mean, I think if we peel back, and I know just from other conversations with members of the BlackRock team that BlackRock has identified five mega forces that are sort of what we'll call, say, reshaping our world.
Mhm.
At a higher level, can you walk us through them briefly and explain how they're creating both challenges and investment opportunities? As we take a look at things as wealth managers.
Absolutely. And I would think about these five mega forces as kind of like the big buckets of change. And within each mega force, there are themes and sub themes. So we have five, as you mentioned. The first is probably the one I'm spending the most of my time talking about, which is digital disruption and AI,
Mm-hmm.
which is all about the technologies that are transforming how we live, how we work. The second is demographic divergence. And that one's a little bit interesting because at its core, it's about population trends. And the irony of all these mega forces is that population trends are kind of a runaway train. Once they're going, they're actually very hard to disrupt. And so I say divergence because we have two very opposite trends happening in different parts of the world. In
Mm-hmm.
countries like Canada, the US, parts of Europe, certainly Japan, there is this shift towards aging populations, where there are a higher proportion of adults over the age of 65 in those countries than there are maybe adults below the age of 30 or children under the age of 15. And that has implications on every economy when you think about what's available as a labor force, and certainly the spending on things like healthcare when you have a larger aging population. But on the other side of the story, in emerging parts of the world, you have a country like India where over 60% of the population is under the age of 45. And that also has impacts, right, on what
Mm-hmm.
industries, how the labor force is deployed, their needs, their infrastructure needs. And so again, demographic divergence is one that's very interesting as a structural theme. The way I think about investing in it is through things like infrastructure, as well as certainly through healthcare investments. And then the third megaforce is this idea of a fragmenting world. It's one of our newer megaforces because I think since the end of World War II, many people would argue that we were on a kind of one-way escalator ride of globalization. And then, we had a couple of big events. I'm thinking about things like COVID, where supply chain resilience became kind of a number one priority for people, or even things like Brexit, or recent tariff news, which are about the goods and services and labor's kind of moving across borders, and now some of that kind of changing a little bit. The fourth megaforce, I think, is actually one that's very tied to the three that I already mentioned, and that's the energy transition. The reality is, with megaforces like AI, we need a lot of energy to support them. And so this is where I would bucket something like electric vehicles or clean energy, as well as new energy technologies. And then last, but definitely not least, is the future of finance megaforce. And that
Right.
is all about the evolving financial architecture that I think, Conrad, you and I really care about, because that's our job. But I think
That's
is
right.
sometimes, off the radar for a lot of investors, that there's things like financial technologies, as well as things like blockchain technologies that support Bitcoin or Ether, or other digital assets. And so that's a very exciting space as well.
Yeah, no, I think it's very easy to, unless you're in the business, underappreciate the degree to which the financial system is currently being rewired
Hmm.
on blockchain rails, and actually the profound impact it'll have in terms of the, on the industry in aggregate. I mean, I think that we're not looking forward too much to say that even, the small amount we've done to date has made a big impact.
Absolutely.
So, inside of all of this, the next sort of area I would just want to maybe touch on a little bit is, something that I think comes up very, very regularly in client conversation. So I know it's on everybody's mind, but just talking about, the sort of the theme here of artificial intelligence. I know that this, again, I would be remiss if I didn't ask this. So, again, looking for your perspectives on this. I mean, this, as clients I have that are, in the engineering business will tell me, look, AI is not new. I was doing this in the 70s. David, thank you for that. But why does it suddenly feel like this is like the big thing, and why is this sort of become sort of this, why is this really sort of just really permeate the cultural, zeitgeist here at this point?
Yeah, I think David is right to mention that AI has been around for even longer than the 70s. I mean, even getting its kind of early start with Alan Turing in the 50s,
Mm-hmm.
father or grandfather of artificial intelligence, thinking through, things like the Turing test. Could we have machines one day that emulate human intelligence? And if yes, how do we think about measuring that? And so the Turing test that he proposed was this idea, as many people know, that, if you had a human evaluator looking at the output of a machine and of a human, and if they couldn't reliably tell the difference between output that came from a machine versus output that came from a human, that machine was said to have passed the Turing test, this kind of binary outcome. But this was in the 50s and 60s that we were thinking about these concepts. And so, again, you're absolutely right. It has been around for a while, but a couple of things changed in the last 10 years or so that made AI such a relevant topic today. The first thing is that we have an explosion of the amount of data at our fingertips from, I mean, really just the increased digitalization of our economies and of our work. We have things like medical records and text messages and essays and Wikipedia pages and so much more data that is then kind of used as fuel. If I go back to cars, again, I promise I don't really know that much about cars. My husband will tell you that. But I like the analogy of thinking like AI, thinking of AI as a car, and the gasoline, the fuel is data. And that was a big unlock
Mm-hmm.
for us over the recent decades. Any good car also needs an engine. And I think in the case of AI, the engine is the hardware and specifically semiconductors. We've seen huge leap forwards in the amount of processing and compute that we can do with these technologies. There's still more to come, which I think is really exciting. But unlocks there from a technology and hardware level are a big part of what enabled us to use that fuel, that massive amount of data, and translate it into usable intelligence. And then last, but definitely not least, is thinking about, again, back to this car idea, but you had to be an Alan Turing, you had to be a computer scientist to interact with AI tools in the past. And this big unlock, as kind of simple as it sounds, was just having the steering wheel in our own hands, going online and talking to an AI tool the way that you would talk to a friend, asking it to do things, being curious, and having that technology at our fingertips is what has made this feel so different than before. So yes, long answer short, AI is not new, but I think mass market AI certainly is, and it's still the early innings there.
Right. So, I mean, that definitely sort of gives some perspective on why this is it's been something that's been bubbling under the surface for some time. And then, it's become democratized in a sense then.
Hmm.
So if you're somebody, for instance, you're an executive, you're a business owner, or just somebody in everyday life, you know, how with for people who are looking at this, like how might these changes reflect, they're showing up in AI, right? Because of the ability to use data, right? The ability to process it properly, as well as the user interface, which is very, very important. You don't need a computer science degree to talk to the machine anymore, right? How do you see, where are the impacts happening in terms of being able to practically use it? Because that's one of the questions you do see, and where you see a lot of, some of the maybe more negative narratives around AI come out, right? Is they're always talking about, well, no one's using it or they don't know how to use it. So what are some ways that someone could practically put this to work today, just based on the current technologies, that could have a positive impact?
Well, I think one of the things that makes this AI breakthrough different than other breakthroughs is how it's not really just a new technology that the technology side of a company deals with. It's almost like a new productivity layer that every team in every company is trying to figure out right now how to harness for
Hmm.
themselves. And I think part of what's kind of tricky about this is that there isn't really a kind of easy button solution for every part of a business or for every team. And so it is leading to this stage that we are in now, which I would argue is kind of like the great experimentation. Where do we add this technology that makes sense, that is both efficient and safe. And practically, what could that mean? I mean, we see companies exploring a lot of different avenues for increased productivity, if whether it's faster customer service, more efficient marketing creation, documentation review, software development, certainly forecasting. I mean, things of this nature. The reality is that AI makes these very important tasks a little bit easier than maybe having to build them from scratch on our own. That said, is it a golden answer to everything? I think no. I think we're going to have to live through a lot of trial and error in terms of figuring out how do we want to use this and when. And I think particularly in industries where 99.9% accuracy is not accurate enough, it'll be slower for AI to be deployed in those spaces. And I think that's actually a good thing. So I think we are in a little bit of a realm of experimentation, but I think that the first kind of initial place for AI is in kind of exploring for each company and for each kind of subdivision in that company, what are the practical ways that I can use this to make my life easier, to gain more time back in my day, or to make things a little bit more cost effective than maybe they were before.
Right. So yeah, I mean, if I sort of maybe dial that back to sort of the biggest picture level, it sounds a lot like then maybe these are my words here, is that really we're talking about AI as it's a platform, it's not an application, right? It's like the computer, it's not the Microsoft Excel spreadsheet in the computer, right? It's not
Absolutely.
Windows, but it's the machine that you can run other things on, and you've got to figure out how you're going to apply it through the different programs that are available. But in and of itself, it just is there.
It's there's this might have been Jensen Huang who said this, but I've heard AI described as a hammer. That a hammer can be
Yeah,
used to build a house. It can also be used to break one down. It's a tool just like anything else.
exactly. Well, it's like I say, all tools we can use them in different ways here. As we sort of look, again from BlackRock's point of view, you sort of break down AI into three stages, right? The infrastructure
Hmm.
build out, which I think it's safe to say we're currently in that, right? Then, enterprise adoption, which seems to be starting, and
Hmm.
then what we call real world applications like robotics and autonomous vehicles, which I know, again, so where do you think we are in terms of these three, sort of these big stages in terms of infrastructure build out, enterprise adoption, and real world applications? Where are we at in those stages as it stands today here?
So you're absolutely correct, Conrad. I mean, we are absolutely very much still in the infrastructure stage, and we will be for some time, which is kind of a hard thing to wrap our heads around because we've seen the headlines of, in 2024, $400 billion of spending on AI infrastructure by these large AI companies. 2025, another $500 billion. 2026, this year, I saw estimates at the beginning of the year around 500, then 600. Now it's closer to 700 expected spending this year. And, as you might be able to guess, 2027, it's not going to be zero. We will likely kind of exceed that $1 trillion level just in that year for spending on this. And it's so much that it is really hard to wrap our mind around it. I think one of the key topics right now and going forward when you think about this infrastructure build out is the question of power. And it's a big part of the reason why I think there's a lot of interest in companies exploring solutions to meeting this future power demand that we kind of know is headed our way. Now, adoption, you're exactly correct. It is starting to happen now. These phases will overlap with each other. There's both enterprise adoption, which is companies thinking through how they incorporate these tools into all the different layers of their businesses. There's also consumer adoption. And it is sometimes funny to see how consumer adoption and enterprise adoption are a little bit like a race with each other, and that sometimes consumer adoption moves in ways that maybe we didn't expect before. And in this case, I'm thinking of consumers using new AI companies that, let's say, allow the user to generate new music. and consumers using this technology not to make money, but to make songs that they then send to their friends or play for their children. And so there's definitely practical enterprise application adoption that's happening right now, but there's also some consumer experimentation, which I think is just very interesting. And then last, but certainly not least, and of course the timing for this one is the most up in the air. Is this a 10, 15 type of year transformation? I think that remains to be seen, but this final phase, that the transformation phase, it is when this technology starts to hit the real world a little bit more.
Mm-hmm.
When we move out of text and code and into things like self-driving vehicles, or looking at how a drug molecule might behave in the human body, and modeling and simulating those potential different outcomes using AI techniques. That's the phase I'm the most excited for. It's the one that is kind of the hardest, I think, as us as human beings to sit with.
Mm-hmm.
The same way, like if you went back, in the early 80s and you described that you were working as a software developer, or that that you were working as a social media influencer, right? They would look at you like you were crazy because they didn't really have the awareness of what would happen when we rolled out the internet, and what industries and sub-industries and services would come from that new technology. And I think of the transformation phase a little similarly.
That's right. I mean, I think that, again, referencing Jensen Huang there, the CEO of NVIDIA, right, is that he's always talking about the fact that these data centers are just basically factories for IQ points, and it's really hard to know what direction we're going to go with that. Like if you look to the Industrial Revolution and the Steam Revolution, we kind of know what a cotton gin does, right? But we don't. IQ can be transformed into anything, and it can obviously go to a lot of different layers, as you're referencing things like drug development and and such, in places you don't immediately think where it might have an application. But when you pull back, right, really we can sort of see, if you're manufacturing IQ points in a factory, which is effectively what these data centers are, AI has the power to really change the economy. And if we think about professional fields like healthcare, legal, financial services, accounting, et cetera, where do you see the biggest efficiency gains, or shifts that are going to be driven by AI? Like, where is that happening? And at this point, where give us a view on that, please.
Yeah, absolutely. I mean, I think there will be applications in all of those industries, which again is what makes this technology so different than typical tech breakthroughs of the past. They were something that only one part of the organization had to work through using, and that was the tech part. And by the way, between quantum computing and cybersecurity, the tech departments of every company are going to have their hands full. But no, to answer your question directly, I think there will be gains in healthcare, in legal, in financial services, in many professional fields. And I think the first big unlock is time compression. But maybe I'll tie back to the transformation phase for a moment. There is, over the long term, the potential for many new things to arrive. And in the first part of any big unlock or breakthrough in technology is using that technology to do what we are already doing, but faster, cheaper, more efficiently. The next phase, that final phase I was referring to, the transformation phase, is when we use it to build new business models and new industries. And so I think there may be some of that over the long term, over the medium to long term. But I think at the moment, it's going to be, help with research, help with drafting, coding, reviewing things, analyzing things faster than maybe we could on our own.
Great. Well, I mean, and that, that in and of itself is transformational. I mean, speed, allows, all sorts of different things to happen, and other businesses and other services and other careers to be built on top of that speed rail. No, again, going back to the Industrial Revolution, no one needed a Boilermaker in 1650, but you certainly needed one in 1850.
Exactly.
So you exactly, 60, you would never, people in the in a previous year would never have imagined the need to boil that much water to create steam. In 1850, it was completely the most normal thing in the world. So again, with referencing your grandmother didn't see a car until she was, I think you said 11, right? This will be kind of the same thing. Never imagined a mechanical horse, and now we got one that's rolling down our street.
Yeah.
Sort of turning away from AI onto infrastructure, which I know is another high conviction theme that you have here. So we you see certain articles, right, in publications, talking about an infrastructure gap in the U.S. So why is that infrastructure gap so large, and how are some of these mega forces, such like AI, reshoring, demographics, how are they driving the investment need? How are they driving shaping infrastructure investment going forward from where it would have been, say, in the 80s or the 70s?
Well, I think that is actually the crux of the issue. Is a lot of that infrastructure was built in the 70s and the 80s. So we're dealing with old physical systems, and at the same time, new demands from new technologies like AI. So we have a lot of modernization work that we really need to do, and that is true in the U.S., but it's also in other parts of the world as well. And when I say modernization, I mean like trillions of dollars of modernization in roads, bridges, water systems, ports, airports, like the stuff that I think we take for granted until it doesn't work. Until you're in your
Mm-hmm.
home in the summertime and you lose power because of a storm, and you're like, wait, I can't do anything without these critical infrastructure services. So it
Exactly.
is one of my themes that I am the most excited to talk about, because even though it may not have as much mystique to it as AI does, it is very, very important. And all of these mega forces that we've talked about, what's so interesting to me about them is you have themes like infrastructure or power that are rooted in the real world and like physical constraints, things that we don't have endless supplies of, like land and water and energy. And then on the other hand, you have these digital economies, things like blockchain technology, AI, and those are kind of seemingly like endless. Like how many IQ points are we going to look for from these factories? Is there a number on that, or are we just going to get as many as we can and keep asking for it, kind of in an
Mm-hmm.
unsatiable way? And so it is funny how you see this explosive exponential growth in the digital world, and yet still kind of being tied to earth by those physical constraints. And infrastructure is a manifestation of that at every level, depending on traditional infrastructure or even digital infrastructure, which is where some of that new demand is coming from.
Right. So you see, as sort of the digital world grows, which, whether you're talking about artificial intelligence, the traditional internet, blockchain technology, et cetera, it actually feeds back into a constrained physical world that has to produce the power, right? Because if you don't produce the electrons, that digital world ceases to exist.
Exactly.
And how do you think about this? We do include, here we certainly do include some exposure to infrastructure in portfolios, but how does BlackRock think about allocating assets into portfolios for infrastructure, and where do you see that as a role?
So I think infrastructure plays a couple of interesting roles. I often joke, because I am a big fan of puns, that it is a very unique building block. And you can think of bricks or whatever it is from infrastructure that conjures this idea of building blocks in your mind. But it does a couple of things that a lot of investment exposures aren't able to do simultaneously. So, one hand, you have infrastructure demand being propelled forward by all of those mega forces I mentioned. And really, you can make a tie from all five. You think about AI, energy demand, you think about even demographic change. If you have a population of overwhelmingly non-working age people, if you think about the government, that's a much smaller tax base for them to rely on to pay for those upgrades that we need. And so new
Mhm.
systems of infrastructure investing and private infrastructure investing and all of that is happening as a result, really, of in part that mega force. And so you have all these structural tailwinds propelling forward demand for infrastructure that are constrained by real world physical limits. Like, to meet our digital ambitions, we need to get the physical part right. And then on the other hand, you have the portfolio angle. And forgive me, Conrad, because I'm about to get a little bit nerdy here.
Please
But this
do.
is
Please do. You're
this is
good
what we
company.
love. Good, good. This is my crowd. So infrastructure from an investment perspective is very interesting. You think about a subtype of infrastructure, regulated utilities, for example. And over time, what we've seen is that they can often play a little bit of an inflation hedge role within a broader portfolio because of how their business models work. So if you're a regulated utility, and we all have one in our backyard, Conrad, yours is probably different than mine. Now, these regulated utilities are able to charge services to their consumers who have, pretty relatively inelastic demand for services like electricity and water, and they're adjusting those rates based on inflation data, on CPI or PPI data. And so over time, they're able to adjust the cost of their services to what's happening with inflation. And in doing so, their business model gives them somewhat of an inflation hedge characteristic, which I think is really interesting. And then secondarily, you get the other benefit of diversification, right? The fact that these public infrastructure and private infrastructure companies behave or tend to behave a little bit differently than your broad S&P 500 or NASDAQ 100 type exposures. So they add a little bit of a diversification element there. And then certainly, again, going back to kind of the utility side of infrastructure, regular kind of cash flows and dividends from those companies and from those stocks as well, which again can be nice to get kind of all three of those things from one exposure. And I've found, I do a lot of research on themes, that there are themes that are changing the world around us that we can kind of see from the beginning that are going to be a big deal. But then there's also themes that have that element plus a portfolio benefit. And I find that's kind of the sweet spot. Something being propelled forward by economic, technological, societal advancement, plus the ability to add some layer to the portfolio that maybe wouldn't be there without that exposure, whether it's diversification, low correlation to other asset classes, or inflation hedge characteristics.
All right. Well, that's I appreciate that. That's a great viewpoint, and sort of actually brings us back almost to some of the what is the most basic infrastructure, which is the thing that happens when you turn your tap on or you flush your toilet. It's you're dealing with that every single day. I'm going to sort of last question here. I'm just going to sort of take things back to something you mentioned earlier. We talked a little bit about blockchain technology, and I know that Bitcoin and other blockchain or crypto assets are something that BlackRock has has featured under its Future of Finance Megaforce. What are the unique characteristics of those that maybe make it worthy of consideration for for an investor who has an otherwise diversified portfolio?
Yeah, I think that's an interesting one, because that's also a little bit of a unique diversifier, or more specifically thinking about a particular digital asset, which is Bitcoin, which is
Yes.
the largest crypto asset today by market cap, the oldest and the most widely adopted, and it uses as its underlying technology this blockchain technology that we've brought up a few times. But Bitcoin, the token, is a kind of an interesting one. It's a digital token with scarcity. There will only ever be 21 million Bitcoin in circulation. And because of that scarcity, it's combined with some other characteristics, including the fact that it's decentralized, the fact that it's global, the fact that it can enable people to make these peer-to-peer transactions. Peer-to-peer just meaning, Conrad, if I were to give you a $10 note and you were to take it from me, that's a peer-to-peer transaction because there's no intermediary in between us. Now that's really interesting, those combination of characteristics. And so that's a big part of the reason why when people think about what's driving the price of Bitcoin, it is, really at its simplest form, a kind of a supply and demand story. But then you couple it with, okay, well, what does it do in a portfolio? And that's where things get a little bit interesting, because it is a very efficient asset class from a per unit of risk perspective.
Right.
meaning that it doesn't take a lot to do a lot. And so we did analyses on, let's say, a 60-40 portfolio, 60% stocks, 40% bonds. And we looked at what 1% or 2% allocations to Bitcoin look like over a number of time periods funded from equities. And it is true that over 1 year, 3 year, 5 year, even 10-year periods, the efficiency of the portfolio is improved by even something as small as 1% allocation. And so even though I think when people look at Bitcoin, they think about volatility, and certainly it is a volatile asset. What's interesting to me about it from a portfolio lens is the fact that you can use very small amounts of it to have a reward on the other side, risk adjusted reward, efficiency, the portfolio goes up. And typically with any other asset class, if you were to add something to a 60-40, like you kind of need to add it at levels of 5% or higher to really see it do something to a portfolio. And so something that's volatile is maybe not necessarily that volatility is the problem. It starts to become, how do I size this? How do I source this? How do I think about owning this new asset class? And maybe the answer is I don't want to, and that's totally okay. But we are seeing a number of investors start to explore it with this idea that it is a potentially unique diversifier.
Right. It's as you mentioned, it's an incredibly efficient way to air quotes improve a 60-40 portfolio, from a risk return standpoint. So, I think, I know we're coming up against our time limit here, Anna. So I just want to take a moment just to thank you for joining me here today And, again, for all those listening, if you have any questions on this or anything else, please pick up the phone, book an appointment on through our Calendly, send an email, smoke signal, however you like to communicate. We're happy to answer any questions you have. And thank you very much. We'll look forward to speaking with each and every one of you very, very soon. Thank you.